Oh, hello and welcome to another episode of Scotch and Stocks. We're having so many technical difficulties. Crazy.
Uh, yeah, somehow you.
Are you guys joining on incognito?
Damn, they're back, Nestor.
Jeez,
They are back.
we are
We should
back,
have.
but you
Hmm.
aren't being recorded. Sorry.
Yeah,
I'm
because I think you guys are on incognito, but it's okay. These are teething problems.
wait,
Are
but I'm
you,
just on the normal Safari browser.
you guys have Chrome?
Yeah, I have Chrome as well. Let me just
Yeah, do it on Chrome.
search it over Chrome.
Might
Yeah,
be
just one
better.
second. I'm right back.
Are we even live?
I have a little issue here. Is I have this big message.
Yeah, it tells me that you're not getting recorded, which is odd.
Yeah, and I cannot remove it, right?
Do you have Chrome on your computer?
What do I have? Chrome.
Like the browser Chrome or Edge?
I'm using Safari. You want me to switch to Chrome?
That's what I'm thinking because it's like, yeah, you both are using Safari, so
Oh yeah, okay. Yeah, give me a minute.
We are live, so we can talk already about
it's
the
okay. We take it
outlook.
easy because I think we're on Scotch and Stocks. So there's no worries. As long as we get the recording saying I'm happy. Are we live on Market Bus? Do I bet? We're probably no. We're live on. Okay, so we are live on Scotch and Stocks, which is fantastic news. Thank goodness
Yep.
nobody follows me. But because we should also have Market Bus, but I think Simon had to take off Market Bus in order to get Scotch and Stocks, and yeah,
All right. Is it still?
Okay,
Is it
perfect.
it seems it's fixed. Welcome to another episode of Scotch and Stocks or Market Bus. Depends where you're watching at this point, but we're probably gonna repost it on Market Bus as well. Welcome. We have Akim, Ole, Timothy, and myself, and today we're gonna be talking about stock markets. What you're investing in 2026, what is the expectations, what sectors are we looking at, what we're finding interesting in the investment world and asset management, and last but not least, the top picks for 2026 and the companies that we're keeping an eye out on. Because we have 4 popular investors, so don't forget to check out our comments down below and make sure to click the links because we share our portfolios and share our ideas. So, welcome to another episode of Scotch and Stocks or Market Buzz, depending where you're watching this. Simon, fix it. Okay. All right. So, Ole, I don't know much about you. So, introduce yourself. Who are you? Why do eToro people care? Tell me about your story. Tell me
Yeah,
about yourself.
I just finished my master's in international business with a finance specialization. I just recently joined the Popular Investor Program about 3 months ago, and I'm mostly having my portfolio US based, and it's a mix of companies I believe that are fundamentally strong, but also I do some whale and insider tracking. So I'm not really specific on one sector. I mean, currently you have a lot of semiconductors, AI related company energy stocks. Yeah, so I'm just trying to do a bit of stock picking and see what's giving more average return in the market.
Okay. How long since you joined the Popular Investor Program?
End of October last year, but I was
Okay.
on eToro for 5 years, I think already.
Nice.
But I just got started in 2022, like with really structuring. And before I just had money sitting around and didn't really know what I was doing.
Nice. Well, I think that's everybody's start on eToro. It's like we just find the platform, start learning, and then you sort of develop. And then everybody becomes a cadet, and then Akeem tries to, So
It was
you gotta
actually
make sure you
Akim
go
who
quick, real
introduced
quick.
you, so maybe Akim, you can
Yeah,
tell
but
us why you want us to know more about Ole.
Yeah, to be honest, Ole, I met recently, and we've been chatting, and he always comes up with really exotic ideas. I'm not saying like Nvidia stock pick or Microsoft stock pick. It's like just yesterday he found me a miner. so who mines, right? Mines minerals in Greenland, listed in the US. So
That's an
like
interesting trade.
yes, and we're going to talk about this stock. I want to talk about this stock because I'm planning to initiate a position there even. So we're going to talk about it. I'm sure we're going to talk about Greenland. I mean, we have to.
For sure. For
It's
sure.
like the main theme of this year is Greenland,
Yeah.
Venezuela and Greenland.
Yeah. We just finished an episode with actually my dad. My dad like is a
Oh,
pipeline engineer, and he worked
El
his
Padre.
last. Yeah. And he did his last project was in Venezuela, oil like gas a gas project, and we just finished that episode. So yeah,
Hmm.
yeah. We got to touch on
Gotta,
that for sure. That was
yeah.
interesting. It's an hour long, so yeah, very good knowledge. But okay, so I want to get an idea of sort of how you guys see 2026 because a lot of people started the year bearish. I don't know where you guys stand, right? Usually we have the bear and bull scale where the zero in the bear and bull scale is short everything with everything you own, and then the bull scale, which is like a 10 bullish thing. How do you see 2026? Like just to get an overview of what your expectations are for the year.
Yeah. Who goes first?
Akim, we'll take
let's
Akim.
start.
Yeah. Well, I mean, I can go first, but
Look,
yeah.
I would say a 10 and then a 2, and I'll explain. A 10, the first 6 months of the year, the first half of the year, for me is a 10, because there will be, the expectation of the new Fed chair, massive printing, all this. I think really we will have really proper euphoria starting, with inflation going down, labor market is weakening but not too strong, and really with a super dovish Fed chair, and I think we will start pricing in. He will. He will start working in May, the Fed chair, and then of course, I mean, we will have really fantastic first few weeks, in my opinion, in May and June. Really optimistic, lower rates and everything. But I feel like something will break in the second half of the year because valuations will be overstretched. They're already a bit stretched now, and I think they may be overstretched after this euphoria due to the Fed chair. I put really a lot of weight on this new Fed chair because I think it will be a big thing. We know it's going to be a super dove who will lower the rates massively and will print a lot. And I think there will be a lot of euphoria related to this. But after euphoria, there's usually a correction. So I am not. I'm really cautious on the back end of the year. We started the year, I think, quite strong. So that shows, there's a momentum going into 2026, and I see catalysts for now. Earnings reports, and then the Fed chair being picked, and so I think we will have a good first half of the year.
Okay. Ole, what are your thoughts? Like, how do you see 2026 playing
Yeah,
out?
I totally agree on this. On your scale, you mentioned, I would probably say around a 6 or 7. And I see it the same as Akim. I think the start will be great. Also, what people maybe oversee, the last reporting we got regarding inflation, US inflation, only had 2 or 3 factors instead of the usual 15 or 20. And because the US now gets cheap oil from Venezuela, which is one of the big factors in those reports, I think it will even ease inflation a bit more than expected. And the last one was already more than expected, which puts even more pressure to ease the rates or cut the rates, which I think will give a pretty good start into the year, which we already saw. On the other hand, I also agree with Akim that in the mid to end of the year, the narrative could change. I mean, we saw it last year with the Broadcom earnings or Oracle earnings, which were, at least for the Broadcom, they were very good. They even beat expectations. But the margins on AI shrank. So the people are really looking on things like this. And we had a lot of reporting if there's a bubble in November of last year. Like there was like a graphic I saw, and it completely spiked. And you also saw it in the stock market, and now it's down again. So I think as long as the fear that we are in a bubble or bubble territory is staying low, the market will do pretty good. Also, one thing that's a bit out of scope is the current Bank of Japan interest rates, because I think On Polymarket currently, they are sitting at 1% that they hire them. I personally believe the probability of them putting the rates up is higher than 1%.
Like a hike, yeah. Okay.
Yeah, like they will hike, yeah. In my
Yeah.
opinion, maybe not in January now, but maybe in March. And I think this is not priced in currently. So if
I
the
think
Fed,
I think it matters a lot about the exchange. But I have
oh, please,
so many
I
good
think
points. So
I
many good
think
points I want to touch on. So many good points I want to touch on. But continue.
no, I think it's not fully priced in. So if it happens, we may have a small setback.
Okay, Timothy, your thoughts, just to get everybody on the same playing field.
So my position going into 26 is knowing that we are entering a midterm year, and the midterm year is usually the most bearish years of them all. So we should expect a lot of volatility. We should expect a bumpy ride. It's we should know 2022 and 2018 were midterm years, and they both ended red. Okay, but this has never happened before, that the third midterm year in a year ended red. So I would say we still end green. So it's more likely that we end green, but with a very bumpy road ahead. So I'm not able to say if we're gonna have a bullish half of the year. I'm not gonna say if we have a bearish half of the year, but I will say that it's very likely that we're gonna have a multi-digit correction, so over 10% during the year. And looking at the past, historically, this happens once every year, so it's not very special for me to say this, but I'm more leaning into a near 15, near 20% correction this year. So that's why I have at least 20% cash in my portfolio, to benefit from such a drop in the
I
market.
mean, look, it's just enough for Trump to post, "I'm gonna tariff the EU 100% if they don't give me Greenland," you know, and then you're gonna have your 20% correction, huh? With
Well,
Trump there.
yeah, I mean, we could see it. There's so many. Well, the Trump factor has been in play even before Trump came into power. So it's like that a black swan could always happen, right? Something that creates that uncertainty. Would that be a buying opportunity? Depends on, I would say, earnings, right? Like earnings have to provide, right? Like I think expectations are a bit lofty. It's true. I think we're expecting forward PEs on the S&P 500 to drop down to 13 from the current levels if we don't go. Yeah, I think I'll share with you that data. But I think based on
It's
earnings growth of the
22,
S&P, it's sitting at
21.
22 and it's expected to grow to drop to 13. I read it. Take me with a kilo of salt though. But it depends on the earnings growth. The thing is like you are seeing a lot of expected growth on many different companies. For example, companies like Micron, right? Where the forward P of Micron is sitting at 8, right? Where other semiconductor companies are showing multiples of 10, 20, even 30, right? So it's like
What's
we
your
are
outlook?
seeing.
Because now we're talking stocks,
Yeah.
but what's
Yeah. No,
your
I know.
outlook?
I'm throwing the outlook. But the thing is for me, outlook right now, like I'm bullish. I'm bullish until the story changes. And the narrative hasn't changed, right? We are seeing an easing Fed, right? I agree fully with Akim that we potentially continue to see the Fed cutting after June if we don't continue to see cuts in January, which is my base case, right? I think the market is expecting it wrong. Yeah, Japan is a big fear just because they are hiking and they're in a hiking in a hiking path, and it all depends on the Japanese US dollar exchange, on the currency exchange. But they're also easing, right? So they're also like they're also spending massive amounts of money in Japan. So okay, so that's going to potentially create a little bit of inflation over there. You have the remainder of the year so you have the Fed, you have earnings potentially growth. Like as long as the AI build out continues, which I'm expecting it to continue due to the big beautiful bill implemented by Trump, the next 3 years is a massive capex boom. You have to spend, right? Because you already started the spending cycle. You have to finish the factories and infrastructure and industrial capabilities, because if you don't, you can't take advantage of the tax benefits. So that's the big play here, right? Like for me, it's just like it depends on how the economy plays out, but the story continues to be we're spending. America right now is open check. We're willing to go crazy until that's does either that stops or we
This
could
is the
potentially see,
capex to revenue from all tech stocks.
right?
It's like Meta is like an utility company right now. The things they're spending is like so extreme compared to their usual spending spree.
But
So
remember,
so so we're looking at companies, tech companies that's overspending, and you have to wonder like who's gonna be the winner, and also is there going to be too much spending, and how is the markets gonna react to that too much spending? The market's not gonna like that, right?
it didn't like it, you know, like the idea that we go into bubble territory, at least in AI, tells you that there are some fears, but we're still nowhere near. Like most of the spending last year was from cash flows. We went into negative cash flows when we went to the summit. You know, it's like in Q3. So it's like with and we're talking about massive amounts of revenue that this could potentially create down the line. We're still not going to see it because the build out phase is just starting. We're in inning 2 out of the game, right? So it's like we build out and then we start seeing the money coming. The question is, a lot of people are asking for the money now, but the reality is like you still need the development, you still need the expertise. It's going to be faster, but it's going to take a while. So for me, I'm bullish for the year. I'm bullish for the year until the story changes. And so far, I have not seen the story change. Earnings have been great. Uh, Spending continues. The Fed's going to go into a cutting cycle, and Trump is stimulating. Policy and regulation is in favor of spend, at least for now. So that's where I'm at. You know, I'm bullish. I'm bullish, just to say the least. But any thoughts? Akim, cannot hear you. So many. This has been one of the most issues we've had in.
Otherwise, just let me jump in quick.
Yeah. Ole, go.
If you compare the past bubbles we had with the market development now, there's one graphic from the Financial Times. We are just technically, if you compare it to other charts at the start of the bubble. I think besides the housing crisis from 2000 to 2009, we are sitting relatively low from S&P development in general.
What happened?
Yes, Akim is back.
Yes.
Yeah, you're
Should
back.
work now. Sorry, I didn't mean to interrupt. Ole was talking, right?
No, I'm finished.
Oh, no. You
Sorry.
got it.
Yeah.
So tell me.
Yeah, I was just going to say, it sounds like we're four of
In
us,
line.
maybe except Timothy, somewhat bullish. If we want to include Timothy, we would say at least cautiously bullish for the year. And the chart that you showed, Timothy, is really interesting. Tech companies, we used to say that it's like the least capex intensive sector, that you don't need to spend much and to take any loan to to develop IT systems, etc., etc. Because before, tech was mostly software, but now with the AI, there's really a proper revolution, and tech has really become about infrastructure, data infrastructure, data centers, but also the entire energy infrastructure that you need to power tech. So these big tech companies, for the most part, they have actually turned into, in a way, utility companies, by providing the necessary data or computing, or you know uh, and we have entered a new era where the most efficient companies will be the ones that outperform. And if you look at the companies that spend less, they've been outperforming than the ones that spend more. On that chart, the ones that spent the least, I mean, there was Nvidia, there was Google. Those two spend less than Meta and Microsoft, and they've been outperforming. We cannot even, discuss at what level they were outperforming, because they were investing, but in a very smart way and in a very efficient way, compared to Meta, for example, that have been really investing really a lot, almost like throwing money out of the window, or uh, because they had to somehow catch up on the growth rates of the other ones, the more successful ones. And so there's a lot of fear right now for Meta, if they will be able to find again the path of growth without spending as much. So they will have to try to reduce less. If they don't, they're going to break, and it's normal. If you look at 20-year windows, we never had the same Mag 7. The entire Mag 7 was different 20 years ago, and then 20 years before that, and 20 years before that. The only time one single company was present in two 20-year windows, interestingly, is Microsoft. Microsoft was in the Mag 7 20 years ago. It still is now. But 20 years from now, you will have one or zero out of the 7 companies still present in the Mag 7, and this is something we need to think as investor. You cannot just buy and hold forever. I hear this a lot, but I think you need to buy and hold as long as the story is good, as long as the story doesn't change. This is what Nestor was saying about the stock market in general. Keep buying, keep holding until the story changes. Don't prepare for a crash before before it happens. Of course, you can hedge risk, etc., but stay invested in your highest convictions. And talking about highest convictions, there are a few big themes, I think, this year. A few big sectors, and I think we wanted to go through them right quickly.
Yeah. So we have. Well, I would love to get. I would love to get Ole's view on sort of the technology, like his technology view, because he did say that he's right now invested in like what's it called, semiconductors.
Yeah, a bit. I'm currently more energy or more AI in general. But I do think there are some great titles. I mean, you mentioned Micron before, which has a very low PE ratio, but it is like there's also aggressive sales priced into this. But also what I mentioned before, I think it's really the narrative on, do we fear that we are in a bubble or not? Because again, with Broadcom, they beat earnings by a very good amount, and they still fell because they lost around 10% of their AI margin. So I think like the I think JP Morgan prediction on growth, especially in semiconductors, is 30% for this year, which would be great. There's also a rise in TPUs, which Lumentum is doing, for example. Yeah, I think like Broadcom is one of my biggest positions in my portfolio. I believe that they have a pretty good outlook regarding price targets, also looking good. But maybe not to go into tech, but into robotics, which I think is a bit under-talked for this year. I think it will be a pretty good year, especially looking at picks like Amazon, which have been underperforming last year. And I think they're gonna have a pretty good year if you take a look at robotics.
Yeah. Nice. So, but the thing is, like this all centers around the AI play, right? Because the thing is, just like semiconductors is AI, right? And then we have the technology companies, which even if we go robotics, officer driving, it's AI, right? So it's like, would you say that your predominant thesis is that AI will continue?
Yeah, I would say, and it will definitely swap over to the tech market, but also to energy. Looking at data centers, there's one stock, it's called Bloom Energy. They have some very interesting partnerships. Vistra is also a big position of mine, but sadly not performing as well because the PE ratio is very high. But in general, there are many stocks correlated to this, also rare earth, what Akim is probably mentioning later, that will benefit from it. But again, only as long as the narrative that we are not in a bubble or that people don't fear enough, and otherwise it probably will also correct pretty fast, even if the fundamentals look great and they beat earnings.
Okay. Yeah, because the thing is I the Bloom Energy, like Mimi likes Bloom Energy a lot, and like because I think they're doing batteries. I think is that's their big play here. No, or would you say
I think it's batteries as
Yeah.
well as sustainable energy.
yeah, like
Batteries,
renewables and all that
no,
stuff?
storage was very crazy with
Yeah.
SanDisk.
Yeah, that's also company. Well, the thing is, it's like you're seeing the growth right now on the other side of the stack, right? Like Nvidia has barely moved in the last couple of months. It's sort of consolidated in between the 180, like 170, 190 range, right? And then you've seen sort of everything else, even though it was already booming, right? You're seeing it go even higher, right? So you're seeing the high frequency RAM. You're seeing the storage, like Western Digital, SanDisk, all of these different players come in because they, funny enough, they are in that part of the stack where Nvidia was when ChatGPT came out, right? So Nvidia produced all of the AI chips and they gave them to OpenAI. OpenAI came in, developed this like ChatGPT, and they had the chips ready to go. Nobody was buying them, and then everybody was buying them. Similar to this case is now we're seeing that in Micron, we're seeing that in Western Digital, where the production has not grown, but they're holding up to the production lines and the inventory in order just to sell. And everybody's just willing to take it off their hands because the build out phase continues, which is one of the things that keeps me bullish on this market. Because it's like the AI build out is telling you anybody's willing to pay whatever it takes in order to finish as soon as possible. You're like, it's a first mover advantage in a sense, right? Even in energy. So I'm assuming that this transfers to the energy sector next, which is like storage, renewables, even like I think GE Vernova with gas, like gas turbines. You have Vertiv with infrastructure and like casing, industrials, cooling. So you have all these different companies that are coming in and they're going to take advantage of the increase in margins. The question is who loses in this case? And there is some truth that the developers and the chips and maybe we see a redistribution of demand, right? Akeem, what are your thoughts on that? Because the thing is like everything touches on the AI trade, right?
Yeah,
So
I agree. I agree. AI has become so large that, honestly, stocks from almost any sector can be considered an AI play. You can now buy, or a miner, like a mining stock, and it can be an AI play. Because you just need literally everything to develop AI and to grow the AI infrastructure. You need energy, you need metals, you need a lot of things really, and uh, investors who say, "Yeah, I don't really believe in the AI theme." I'm sorry, I'm going to look at your portfolio, and uh,
you're in it.
most
You're in
most of
it.
your stocks, your stocks are actually AI convictions, because they already drive earnings in a way or another. So we keep saying, "Yeah, I want to see money made from AI before investing in it," but I don't know what you're talking about. I mean, companies have been making money directly or indirectly from AI already now since a
Yeah.
couple years, and not just Nvidia. Ole mentioned Vistra, and a lot of other companies have been making money from AI, and so I think maybe to be less boring, we should think of, or we should, for our audience, try to be more specific in terms of what exact segment will boom this year. It's been working in waves. We had the chips, we had the energy providers. We're currently having the memory providers like Micron, memory solutions, and it works by waves. So the next wave, what do you guys think will be? What segment? We
I'm
already had the minerals, right? Also the
well.
rare earth metals.
Let's get Timothy because he put his hand up. And if you put your hand up, But
No,
this,
I was just gonna pick on what he said about every company is basically an AI company. Because one example, yeah, no, but
Not every, but yeah.
every
yeah,
company, every company.
I
It's
mean, not PepsiCo, okay? Okay, not
PepsiCo,
PepsiCo, but
PepsiCo, better routes, better routes. AI will make my Coke.
by the way, I'm a heavy buyer of PepsiCo right
Yeah,
now.
it's funny because we made predictions on Market Bus. We made predictions on 2026, and I want to get your predictions. It doesn't. Again, I'm not going to hold you to it. It's just going to be a spur of the moment thing. But start thinking. What is the asset you think is going to outperform? And it's a competition between anybody that's on the show. So think about it. Not now, Timothy. Go.
Yeah, I was saying that one example also is banks. Like I know I sold JP Morgan because I was looking at cyclicality within the banks. Usually they move in cycles, but JP Morgan has become the biggest tech play within the bank sector, using AI, using software, becoming more efficient. And becoming more profitable thanks to this innovation. So I just wanted to add, like, you have to look at different sectors where AI can boost earnings, where AI can really benefit companies, and JP Morgan was one example of what I thought was doing well. On the other side, I'm also looking at non-AI plays, just like I said, PepsiCo. um, I will explain why I'm investing in PepsiCo. Because if you look at consumer staples, it's been trading sideways down for the last couple of 2 years. And the underperformance is very low compared to the S&P. So putting these two together, it's never been this low since 2022. And I'm just looking at a trade where it reverts to the mean. So when something is overly stretched to one side, we should eventually expect the trend reverse, and that's basically what I'm betting on. Also, PepsiCo is a pretty strong company with a wide moat. The predictions on how the earnings will be are very low, so the expectations are very low, so they only need like a small win for them to pop to the upside, because the attention is going elsewhere to AI mostly. So yeah, for 2026, my biggest bet is to bet on consumer staples, and for me that would be PepsiCo. But I also bought a little bit of Coca-Cola and little bit of Procter and Gamble.
Yeah, I think the best performer for 20, and I'm so sad that I was winning. I was winning. Understand this? I was winning, but now I'm losing so bad. My top pick for this year was First Solar, right? Tariffs, defensive. It helps the American
yeah,
production. Energy, their forward PE is looking amazing. I
yeah,
bought them super cheap last year, so they benefited last year, but I think that continues into this year.
yeah.
That company took a massive hit just now. They got a repricing from Jeffries, and I lost a
But
10%.
this is absolutely stupid, really, because First Solar is also a high conviction of mine. Sorry to interrupt you, but you're
No, no.
making me really angry by by reminding me of this.
I
Jeff Jeffries kept the rating a buy on First Solar, but it reduced the price target. And listen very carefully, from a $269 down to 260, so $9 down. It's like, it's what it's $9 down, and the stock shed, just like over
so
10% in a
much.
day like this.
Yeah, yeah, yeah. Because
This
there's no
this
visibility. It's like industrials are giving you visibility for the next 3 years.
But this is clearly a way for Jeffries, in my opinion, to scoop shares for their clients without spooking their clients. They still maintain the buy rating, but they knew, by reducing by a couple dollars the price target. Why would you reduce it by a couple dollars? Within a day, the it can change by itself, the stock price. So it makes no sense to reduce by a couple dollars unless you wanted to buy for cheaper for your clients.
Yeah.
The fundamentals are there. It's dirt cheap. First Solar
Oh,
is
you're
dirt
gonna make
cheap.
me buy more.
So
I'm gonna buy
yeah,
calls. I'm gonna
I,
buy
w- I
calls.
would buy I would buy more now.
The
Honestly,
thing is like now it looks appealing because it was above the price target and now it's under. Like I think we're sitting at 240 a market open today. So
yeah.
right, and then the whole sector took a hit yesterday. So that was super interesting because it was like the AI build out infrastructure plays were up, but then the energy was down. So it's like the stories are just not making sense right now. So that's one of the big scares I have here. But well, we'll get you. Akim, tell me your company. Give me a company
My favorite company.
right now for 2026. For 2026.
It's hard to say because the 20 that I have, they're all my favorite. I don't have
I
a
know, but
I
just
don't have
like
a
it doesn't. It has to like just the one that you have the most conviction, like in the sense of like even if it's like by a hair, like it doesn't. I'm not gonna hold you to it, like because the thing is like I love Nvidia. Do I
Yeah.
prefer
By the way,
Nvidia
I
over
have a
First Solar?
second question for Akim because I know you went in 2026 with 30% cash. But was this because you were waiting to buy, or were you initially saying, okay, I'm gonna hold cash, and now you found a new
No.
opportunity?
No, it was really just for the rebalancing. So I sold a lot at the end of 2025 because I wanted to concentrate my bets. I had 30 assets. I reduced down to 20. I just wanted to have a more concentrated portfolio. That's easier to monitor. I was spending too much time monitoring 30, so I reduced to 20. 20, I feel very comfortable with it. So I had to sell, exit several positions. And so at the end of 2025, I had 30% cash or whatever, but I already deployed them. So right now I have zero. But it was planned that I would have zero. And yeah, I'm comfortable not having any cash right now. Um, and all my positions, more or less, they are equal weighted, or I plan to have them equal weighted, and I will let the performers run. So at the end of the year it will not be equal weighted anymore. The best performers, they will have a heavier weight in my portfolio. So that's why I don't have one specific conviction compared to others. Otherwise I would be more concentrated in one. But if you do look at my portfolio, I have one position that is much larger than all the rest. All the rest are around maybe 5% of the portfolio, but I have one that is around 13% of the portfolio. So it's much more concentrated than the others. It's called ZIM, Integrated Shipping Services. It's very boring.
Yeah,
It's
but
a shipping company.
they've done really well. They've done really
It's
well.
it's an it's an Israeli shipping company. Uh, they pay high dividends, but it's not the reason why I am trading it. And this is actually my only one that I'm trading. It's the only one I'm not investing in. It's really a trade. They are currently looking at proposals to buy them out. And I feel that process is going in a good direction. I think
What's
the yeah.
what's the
Go
price
ahead.
target? What's the price target on the acquisition?
I think it will be sold for around 30 bucks per share.
Right
Right
now it's
now
sitting
is
what
at,
22.
yes, exactly, 22. How do you
It's a
know that?
50% markup because I've been paying
It's
attention to the
crazy.
stock. I have it in my
It's
watch list.
crazy.
I
It's
have it in my
crazy.
watch list.
22. So even if they don't get bought, they're trading at I don't know, 2-3 times earnings. I mean, it's ridiculous, and the dividend yield is just amazing. Of course, the dividend is not consistent, so it depends on their earnings, and then they distribute a big portion in dividends. So one year you can have 25% dividend yield, another one 5%. I mean, it's just shipping, how shipping works. And so that one is very high conviction for me, because the fundamentals are there. It's profitable. It showed some growth, uh, very mild, but it's shipping, capital intensive sector. And at
Yeah.
the same time, there are serious bids to buy out the company, and I think we will have some offers that will leak and that will send the stock up. But it's a trade. I don't plan to hold it for many years.
Okay.
It's really just for this year. Yeah.
I'm gonna be buying sin today. God dang it. Freaking, I just joking. But nice. I mean, like the stock, like I've been paying attention to the stock since 10.
Look, Timothy is the technical analysis guy, right? So maybe Timothy can describe the chart.
We're touching
If it was a
resistance. If we break the
crypto,
resistance points, we have to retest and then
exactly.
bounce up the
So
support levels, and then obviously we see the
exactly.
But we
If
can retrace like we
if
did in November
if it
24th.
was if it was the cryptocurrency, I mean, I think it looks quite bullish, the structure. But I don't trade based on charge. I mean, at least solely.
No,
based
but
on
the thing
charge,
is just
but-
like I've been keeping a close eye on the company. That's the reason I know it, because I have a friend here in Dundee that talked to me about it a while back, and like it was shipping. So you know what I mean? So it was like I'm like, there's more interesting things that shipping, but it was like, yeah, it was during the tariffs and things and all the other stuff. So they took a massive hit. So there might be an opportunity there. And if you're telling me the acquisition, I got paid when Twitter bought when Elon bought Twitter. You know, and then when Activision was bought by Microsoft, I also got paid. So that was nice, you know.
So consider it, Nestor.
Yeah, for sure. Ole,
Consider him.
Tell me. Let's put you in the hot seat.
I have a lot of stocks I like. I purchased like 10 stocks in the last 5 days. I think Vistra is still a pretty good buy. It's if you look on the ratings, it's currently 60% under the price target. They don't have a lot of AI deals. The PE again is very high. They said yesterday they're gonna buy 10 more gas energy plants for 4 billion. The stock basically went up afterwards and went down today, so it's really volatile for energy provider. But I think it's still a pretty good buy.
Yeah, but Ole, the main factor, what is going to send the stock up?
More AI deals.
No, someone. No. You told me someone.
Yeah, and Nancy Pelosi.
Here we go.
In the money.
That's all you need to know. Nancy Pelosi. Dot.
At $180.
She bought more Vistra. Yeah.
Yeah, it's 7% of her portfolio currently.
Holy, massive growth, nice margins.
And in generally, I believe that defense is going up. Environment, I purchased it start of the year. I think I'm up 20% on the position. There's also one stock that's very cheap. It's called Surf Air Mobility. They basically exchanged 25% of their company to what's the one company called again? My God.
Palantir?
Yes, thanks.
Yeah.
To Palantir. Yeah, and defense, especially now with Venezuela, Greenland, and maybe Cuba as well.
Damn, you made it. You were in this trade before it was been pumping like crazy. Talking about it's a 50% gain.
Yeah, I bought it a bit too late. I currently have 30% plus on it.
It's not bad.
Yeah, but
it's a micro cap though. It's small. Like a 200 million.
Also, I just like to go for some smaller but riskier trades because just to get the upside. Like I have some core positions that I think are very, Vistra and Broadcom, so pretty established, and then some smaller which I believe can do a huge amount. Also, there's one in general. Saudi Arabia announced yesterday that they're gonna be open to foreign investors without a residence. So the Saudi stock markets are probably also going to go up. The ticker for this is called TASI, TASI.
If it's not in America?
No, it's completely different. I just looked into it because they were not really open. And I lived in Dubai for a year, and just the way they approach things and also pushing the economy is amazing. And I think Saudi
if you were in Dubai, yeah. I think Dubai was a number 1 or number 2. Most millionaires have moved into the country, so nice. But then the Saudi is different, no? Because Saudi is because you said the Saudi stock market.
Yes. The thing is, it's not nearly as open as Dubai, but they really start pushing it.
Yeah, they're starting to, and well, a lot of people are starting to move to Saudi Arabia as well. I mean,
Yes,
they're
yes.
opening their
As
borders.
we have,
Yeah.
we have a lot of companies headquarters opening. You can now purchase alcohol if you have a certain amount of income. So it's really opening for expats and for the West, which they also have to do. If you look on constructions, there are Neom, which probably not so many. Like many people probably heard of the Line, which is like the very long one building project. But there are actually five more of this. So I think in the long run, also they are really into gaming and esports, building like a city sector just for this. And I think it will attract even more capital than it already has.
Interesting. Markets are recovering. Huh. Okay. Yeah. Interesting. Because, man, Saudi. I have a friend that sells real estate in Abu Dhabi, but it's different. But but that whole area is starting to sort of, they want stability, they want investment, they're looking to grow, right? Even
Yeah.
eToro is in Qatar, no? You're muted because you keep typing. Too much typing. Too much typing. Yeah. What'd you say, Akim? Like we couldn't hear you.
You said eToro is in Qatar.
No? Are they not in
Abu
the Abu Dhabi
Dhabi.
Stock Exchange? Where's Abu,
Abu
Dhabi?
Dhabi.
Am I brain farting
In
here?
the Emirates. Abu Dhabi.
Yeah,
In
yeah,
the
yeah, yeah,
Emirates.
yeah. My bad, my bad. Same. It's all the
Same,
same.
same.
My bad. Yeah, man. But yeah, it's been.
What do you guys think about Bitcoin/crypto? I feel like this.
Are we talking
it's
crypto?
Not, I feel like it's not a very sexy theme anymore. I mean,
There's
I
a lot
have
of competition.
I have quite some exposure now in crypto again. A lot of my cash went in the crypto sphere. I want to hear
Man,
Timothy's opinion there.
I like it. Like the thing is just like we were talking about it on Market Buzz, and it's not the pretty sector anymore. So it's like, it's like there's more competition everywhere, but the fact that people are not paying attention tells you that maybe there's not that much euphoria anymore.
There are, in my opinion, two very good mining companies called Bitfarms and Hut 8. Also politician insider buy from the US. But they really got some very good new like farming technologies, and they're just a bit more efficient. I personally also believe that Bitcoin in the long term will go up, and obviously without having direct crypto exposure, if you go over those companies, we have an indirect correlation to the markets.
Let's see. Wait, this is Bitcoin.
So my take on crypto is that I'm looking and I'm a firm believer of the 4-year cycle. Most people now say the 4-year cycle is broken, but if you believe in the 4-year cycle, then you should know that we are now entering the more bearish phase of the 4-year cycle, usually taking 1 year of a bear market. And I'm not saying it's gonna last 1 year, but I am under belief that we won't see new highs in the first half of 2026. I think it's more likely that the market is gonna bounce here, but form a lower high and then resume lower. I do have some lines in the sand where I'm gonna say, okay, I'm wrong, and then I'm going to allocate more to crypto, and in the meantime trade the level per level. So I'm 5% crypto, 5% Bitcoin, and I think Ethereum is the only altcoin worth having in your portfolio right now. But cautious about the first half year just because I'm taking into account this 4-year cycle.
So so you think there's no chance the 4-year cycle is over? Like that we're gonna go into the 5-year cycle, the mega cycle.
So for my eToro portfolio, I just trade the cycle, but I do have a wallet where I just stack Bitcoin without caring about the 4-year cycle in case there is a super cycle. So we never know in hindsight. But as long as the cycle has proven to be intact, which it did because it bottomed in 2022 and then topped in 2025, and we should assume it will bottom again in 2025. So that's around 4 years. So that means the cycle will still be intact if it follows that path.
Because your price target for Bitcoin was
Going
anything?
lower, you mean to the downside?
Yeah, like you go all in at
Um,
60, no?
yeah, 60, 50 range. That's my price target for Bitcoin.
If I may, I have a different view on Bitcoin. I'm not going to speculate on altcoins because this is really altcoins is complicated stuff. But uh, on Bitcoin, I think things changed a little bit, or maybe previously was more of coincidence. Um, I don't think it follows a rigid timeline in terms of time. It doesn't follow time. It follows liquidity in the market. And previously, the 4-year cycle was matching more or less the 4-year cycle of monetary policy, of U.S. monetary policy, of printing and then of raising rates. And now we saw it. The monetary policy has been, I mean, if Biden was elected, for example, we would have had, the rate cuts this year and a lot of money printing this year, and the 4-year Bitcoin cycle, I'm sure, would have been intact this year, and we would be at much higher levels, really in euphoria. But with the election of Trump and then everything that followed after, the tariffs and a lot of turbulence, the monetary cycle, the 4-year monetary cycle, has been itself broken, the one we've been having in the last 2 decades from the Fed. Um, and that one having been broken, I think the 4-year cycle of Bitcoin also is on pause. And Bitcoin will follow just the liquidity we have in the market. And as we started the call mentioning, we will have a new Fed chair who will be announced. By the way, Trump said early January, so any day now. Uh, this could really send Bitcoin to, in my opinion, a new high. And then altcoins, they may follow depending on the risk appetite that builds up. Uh, so I do think there's here strong potential for Bitcoin at this level now. The chart looks very good. Also, if you put the support level, you can clearly see a very nice diagonal there. And I think we're at a very interesting support level at 90K. It keeps rebounding above 90K in the last couple of days. Yes, thank you very much for drawing it. That's the one. You can even go uh, back really all the way to the bear market. And so that's actually my target. It would be around 130, 140K. It was always my target, and I think we could still have it this year. And as you can see, it could match more or less the time when the Fed chair is there in May. So this would be from my timeline, just to, it's another perspective. There's no truth, anything can happen, and we will know it
If
soon.
that trend line breaks, would you reconsider?
Honestly, I'm not going to reconsider if it breaks just because the chart breaks. If we're going to have monetary easing in the horizon, and institutions keep accumulating Bitcoin, uh, I think it will rebound. It just retail needs to come back and to start buying, but the institutions keep buying, and as long as we have easing, monetary easing in the horizon, I'm bullish. We might break it. We might break it for a couple weeks, couple days, and that's that can happen. But it will just change a little bit the angle of that trend line.
I'm asking
Um,
because I'm trying to adapt based on what's happening in the market. So I'm asking like what should happen for you to, yeah, cut the position if your thesis is wrong.
So I would cut completely Bitcoin if quantum computing completely invalidates the blockchain and it makes it a system that's absolutely not secure anymore. This is like the main risk I'm seeing, and if that happens, institutions will stop buying. Retail will play with it, will trade. So that if that happens, or if we have massive inflation going up, like we have something that indicates inflation is rebounding and monetary policy will be retightened. But again, we will have a new Fed chair picked by Trump, so I really don't see much risk from a monetary perspective. But the key risk I'm seeing is quantum computing, but that's also very speculative. So right now, I am not seeing yet. The factors are there, the ones that will push Bitcoin higher. They're still there. They're alive. They're a bit more distant, a bit in the horizon, in the short term. But with a bit of patience, I think we could go for a new high this year. That's my view. But
And I wanna know what Ole thinks, because he mentioned before starting this conversation that he was into MicroStrategy, right?
Yes, I just think you have more upside and more downside depending where Bitcoin is going. I'm also personally bullish on Bitcoin in the long run. Definitely for this year, I'm more bullish than bearish. The good thing is what Akim mentioned, the M2 money supply is probably going up, which is always a good sign for Bitcoin. I basically like, it's a kind of meme, but there was somebody saying the US dollar in the end is just a cryptocurrency that loses 2.5% value every year on average, which technically is true. The losing part, not the cryptocurrency part. But I believe that especially now with a lot of ETFs being filed in the crypto space, it's also more opening up to corporate money. I mean, BlackRock is holding a lot of Bitcoin, Strategy obviously as well. And also, if you look on the advisory side of corporate banking, they start recommending their users to have around 1 to 2% of their portfolio in crypto. I also believe it probably goes up. But there is one thing, a friend of mine who is in crypto for a very long time. I just had a chat with him yesterday, and he mentioned that there are some companies who took out crypto loans, especially in the AI startup areas. And if they don't have the profit margins to cover them, they have to sell, which would push the price down. So this might be a very small indicator to watch. And also, I personally don't believe it's going to happen, but Trump mentioned there's maybe an impeachment if he loses the midterms this year. And he is a very crypto-friendly president. So in case that would happen, which I don't believe it will, but if generally the crypto markets could stumble over this a bit.
Nice. That's interesting. Because interesting. That put me to think. By the way, I'm gonna put this out there. The worst performing crypto stock that I, for some reason, continue to hold and have high hopes for. Mara, crypto miner.
Mara.
Freaking Mara, dude.
I have Mara as well, Nestor. I have Mara as well.
I'm
Don't
so
give
mad.
up on it.
I'm
Don't
not.
give up on it.
I'm not.
The problem,
I'm so mad.
and I think it's management. It's really, for all the Mara holders, just keep holding, hodl. Because the problem is the way management communicated in the last earnings call. They said they want to rebrand Mara into an AI company, not only crypto. And what really spooked the shareholders is this uncertainty. Mara has been good at mining Bitcoin, has been the best by far at mining Bitcoin, and now it wants to change into an AI company. But what AI? What AI arguments does it have? What competence or knowledge does it have?
Know what
my
no, because you know what my thesis is on them. It's like they decided whenever Mara pivots is the best time to enter in something, and they were like, oh, we're gonna be a data center AI play. And then it's like the data centers companies, if you look at CoreWeave, Iron, all the big names, they've taken a tumble, and crypto has taken a tumble. So it's like they are in this, like, if we have a Venn diagram, they're in the like, this is bad, this is bad, this is the worst, and Mara's like, even though it's like they're great, like they're losing a lot of money on
company.
Yeah.
the efficient. The PE is insane, but I think they were trying to hedge a little bit this 4-year cycle thing, saying that Bitcoin will drop significantly next year. So they tried to not have the same drop like they had 4 years ago, and go a bit ahead and be like, okay, we're also an AI company. Don't sell our shares just because Bitcoin is dropping. But the problem, as you said, is that at the same time, data center stocks were also dropping, what they actually tried to rebrand into,
Yeah.
but this is all a lot of blah blah from management and from earnings
I think it's
calls.
narrative. Yeah.
If you exactly, it's about the narrative and sentiment, and this can change very quickly. And if you look
100%.
if you look at the assets and how these assets generate revenue, Mara is just a fantastic company.
They
I
have
think
access
to
to
rebound.
energy. They have access. They already build out. They can just change
Fantastic
the
grid.
chips. Like it's. I love the company, but I love to hate them too. But I also love the
You-
company because it's like, my
Yeah.
goodness, because
You'll need a lot
the
of patience with them.
dilution. Yeah, when they could have boomed, they dilute it, and then now that they cannot boom, they're like. So
Guys, I hate to interrupt, but it's getting dark here, and I have to go. So
Yes, you are disappearing. You are slowly
Yeah.
disappearing.
anything else you guys would like to talk about?
What's
If
what's your opinion on uranium?
like we're so far, like I think we're like it's like the Venezuelan story. Like a lot in the Venezuelan story is that we're gonna get oil supply
Nestor,
online.
you have to mention a conflict of interest there. First
Yeah,
of
I know.
all, you're Venezuelan. Second of all,
Yeah.
your family's money is from oil,
Yeah,
so
correct.
uranium could
No, but
make
the
you out
thing
of
is,
business.
but the thing is, the story here is like that it's gonna go online really fast, and I just think it's gonna take longer than people expect. Like the amount of policy and regulation and the build out phases and all of the other stuff, even with the micro builders, like we're still in the development phase. These companies are pre-revenue and they're getting valued higher than solar companies that have revenue, proven models, and actual returns. So I don't know. I like solar more than I like uranium right now, but I don't know. I could be wrong. It's like I haven't done the due diligence. Like I would say that. I would say that. But I like solar better. Like look at First Solar. First Solar is sitting with an APE. They have 5 billion in revenues. It's like they're making bank. They're making $1 billion every year. They have the
guys,
infrastructure ready.
I'm gonna leave.
Okay.
But
All right,
I'll put you in the
Thank you,
background.
you
Timothy.
can continue.
Yeah.
We don't see you anymore.
Yeah. Timothy, I'll put you. Don't close the tab. I'll
No.
kick you out of the call, but don't close the tab.
It was a good
All right.
gradual exit. See you, Timothy.
Yeah. The world is deciding.
Bye, guys.
Bye, Timothy.
Nice to meet you,
Ciao,
Ole.
ciao.
Likewise.
Nice. So yeah, that's where I'm at right now. I'm like,
Yeah, I think you are as much in love with your First Solar stock than I am with Vistra.
the thing is like, but Vistra is like,
is it a good thing to be in love with a stock? I mean, this
No,
is
I'm
a more
not.
philosophical
No.
question.
Oh, it's the
like
word-
I'm not
word-
like the thing is
that-
I'm not in love with the stock. I'm in love with the narrative, and the narrative was that like they took the narrative was so negative during when Trump came into power, and it just got punished. People were like, "No, we're gonna cancel the contracts," blah blah blah. Like, and everybody stopped spending in renewables because it was like, "Oh, the incentives are done. This is not worth it." And it was like, he just changed the wording on how you do this. That's it. Like he's giving you now double incentives on going into solar. You just build it as part of a factory instead of, So it's like I didn't believe it. The narrative. So for me, it's the narrative right now. I'm in love with the narrative.
Yeah.
But I'm looking for like there has to be reasons for this to drop. I just don't see it yet. But what Vistra is, what do they generate? Because you were talking about them for a bit.
It's electricity. They have coal, nuclear, solar, gas,
So energy provider.
Yeah.
Okay.
Energy provider, and with not that many AI deals compared to other companies.
Okay. Thing is, like for example, a company like Fluence. Yo, Akim, I told you about Fluence. I told you about Fluence at 7.
Mm.
I hold
I told you.
Fluence.
How much is it trading now?
What did I say? They were
Fluency, $20 right now.
Wow.
and here and their peak was 26, and I think that they're gonna go back up because they still are not capitalizing on any AI revenue on battery infrastructure.
I'm very sorry, but I need to go pick up my baby. Actually,
Nice
my
chat.
little one.
Nice chat. We can cut it here.
He's
We can cut it
he's
here.
finishing at 5, so I need to go get him.
Let me look at the upload schedule.
right.
We're all uploaded, so we can stop it here. Thanks so much, everybody.